it never sunk in the Bitcoin community that in Austrian economics you have two types of money for a functioning monetary system. One is a fixed base, and the other one responds flexibly to changes in demand for money, which is credit money. And so once we accept that, which is criticized superficially because everybody knows that the government just prints money and that's a bad thing. But why is a bad thing? Yeah, we need to really look deeper into the nuance.
Hello, I am Cody Ellingham, and this is the Transformation of Value podcast. In this episode, I talk with Hubertus Hofkirchner, an economist and entrepreneur from Austria. Hubertus hosts the monthly Austrian Economics Salon at Vienna's Hayek Institute, and he shares some fascinating insight into the nature of base money and credit money, how we can understand these from a Bitcoin and Austrian economics perspective, as well as what he sees as the next step for growing the Bitcoin circular economy. Hubertus is a key figure in developing the Bitcredit Protocol, which is an open source initiative focused on building a flexible credit money layer on top of Bitcoin for enabling businesses to finance working capital needs using bills of exchange, e-cash, and the proof of work of the real economy. If you would like to support my work and growing this show, please consider tipping some Bitcoin to the show's wallet. Otherwise, pass this episode on to a friend who you think may enjoy it. If you have any questions or feedback, please reach out. My emails are always open, hello@thetransformationofvalue.com. Otherwise, on to the show. Hubertus, how have you been?
Very busy, Cody, very busy times. As you know, it's a very ambitious project to get Bitcoin to be adopted in the real economy. Luckily, we as I told you, we just raised with a sponsor some significant sum of money to get the project done here from a lab here in Vienna and also for the rest of the ecosystem. So it's getting even more intensive.
Yeah.
But yeah, very, very hopeful to progress this.
Yeah, awesome. Well, I do want to dive into Bitcredit and that whole conversation in a little bit, but Hubertus, you and I first met in Vienna, the home of Austrian economics, and I remember it was a beautiful vineyard in Grinzing, which I think once upon a time the armies camped out as they waited to do battle with the Turks. It was a very interesting place. And we had this incredible conversation about Bitcoin, the history of money, credit, and your work now with Bitcredit. So I thought, firstly, by way of introduction, if you could share a little bit about your background and how you came to be working in this space, if that's okay, please.
Yeah, sure, I can do that. Look, I started out originally in my professional life in banking, more exactly with Citibank, so which was the dominant Eurodollar bank in the late 80s, early 90s, and essentially worked in pretty much all the areas of Eurodollar banking, from the trading room to back office to IT department, because I did a double major in economics and IT. I then went to London to do some investment banking all over the world in IT and telecom. After I came back to Vienna, I resigned banking in 2000 to start being independent. At the time, I built the first online brokerage business here in Austria, which served the whole Central and Eastern European region. I then was appointed by a former client of mine as the CEO of one of the national telephone companies, which was hugely loss-making, to turn it around and ultimately sell it to T-Mobile. And since then, I've done 2-3 other startups and ramped them up, and most of them already sold. One prediction market, a business which I've been running since the year 2000, essentially, is still an active side project of mine. But otherwise, I'm fully focused on Bitcredit now to make sure that business can be adopted in the real economy.
Yeah, and I recall, I may be mistaken, but you also did a little bit of work in New Zealand once upon a time as well with Fonterra. Is that correct? I don't know if you want to mention that or not.
No, it's fine. Fonterra is a very esteemed client of my prediction market company, and we did a lot of research about the future of products, the future of markets, and so I've even been to New Zealand, so I very much enjoyed, though I only saw Auckland,
Yes.
but that was already good fun. So love it. Love
No,
it. It's very similar to Austria in a way. Very a lot of nature, a lot of mountains, a lot of agriculture.
yeah.
And less tourism, I guess, than us, because we have all the Germans and the Italians and the Dutch people who come
How's
to
it?
us, whereas for you have a longer flight, I think.
Yeah, no, certainly North Vienna, it could have easily been Hawke's Bay or Marlborough wine growing region, very beautiful. But Hubertus, my impression when I was talking to you was that really the thing that you saw missing from Bitcoin is this credit layer. And I'm wondering if you can explain what you mean by that, please.
Yeah, maybe if I may, just let me go back a little bit.
Sure.
In 2015, I had already, so to say, what I thought grokked Bitcoin from an Austrian economist point of view. There wasn't much out there in terms of books or anything which with other narratives. So I'm mostly talking of the real Austrian economics, let's say, yeah, in the sense of Mises and Hayek and Fekete and these people. And so I observed that when the European Central Bank cut off Greece from the monetary supply of euros and all the cash machines shut down in Greece, that people did not move on to Bitcoin, which was kind of surprising, because what we had thought here at Bitcoin Austria in Vienna is that if such a crisis happens, that's the moment of Bitcoin. That's the moment when everybody downloads the software and starts paying with Bitcoin, and there we are. Didn't happen. Yeah. And so we had a few discussions, and so the economic explanation then led me to this problem with the credit money layer, and that unless we solve that problem, Bitcoin cannot be adopted as a medium of exchange, and therefore also cannot fix all the problems in the world which it's supposed to fix, like government stealing your money with inflation, asset price bubbles by which young people can't buy houses anymore, the printing of money which causes artificial booms, which are always followed by recession and bust, the inequality which this produces, and all the problems in the economy which with that, like misdirected investment, if people try to kind of salvage their wealth by investing in houses, which leads to an artificial boom in housing. Lots of misdirected investment, but let me stop here. I mean, the fiat system is just one huge heap of problems it creates in the economy.
Well, I guess just pulling on that thread, because I think there's a very important nuance here where if we start talking about credit money from a Bitcoin perspective, people are going to be very critical of that. And I think we can have an intellectual discussion about this. So if we can maybe unpick what your thoughts are on base money, broad money, in terms of how credit can work, and that whole, forgetting Bitcoin for a moment, how it worked, say, under the gold standard, and what we can learn from that period.
Yeah, you're right in recognizing that, and I think there's kind of two types of Bitcoiners, and you're clearly the second type.
Okay.
But the first type is, so to say, the toxic maxi, who hears something which doesn't correspond to the narrative and starts just cussing and cursing and saying, "Oh, you're an idiot," and what's this? And then there's the other half of Bitcoiners who is really interested in finding out more about this situation, and so to say, learning from the problems which there exist in the Bitcoin system. So, and I really like to engage with this second group. And I think the important thing to start off is being conscious that we have a problem, because if you don't accept that, then all looks fine. And the problem which I see is that not only this non-adoption in 2015, once it was clear, I put out the theory, which has since been confirmed, that no country in the world can do this unless this elastic credit money layer is being built. So I was kind of waiting for somebody to build it, since I was busy with other projects, my prediction markets, some other projects in decentralized policy. And nothing happened. Nothing happened. So there were other countries which failed, like Lebanon, where, terrible situation. People went poor, from decently rich for that region to absolutely poor. practically overnight. Yeah, you'd think, okay, this is the situation when you adopt Bitcoin, but it wasn't. People didn't adopt it. They went to the US dollar. We saw El Salvador, big news in 2021, which drove Bitcoin adoption to heights which we haven't seen again, inflation adjusted. Yeah, so inflation adjusted, we have not reached the all-time high from 2021. But then it fell off again, yeah, because what happened, and I've been to El Salvador, I'm going to be back at adopting Bitcoin with a workshop this year. People don't really use it. I mean, Bitcoin tourists come and they spend it, and the merchants then convert it into US dollars. But it's really just a minority of people, and mostly us, who spend Bitcoin there. So merchants often don't even offer the payment possibility even more, even though it's law. The good thing is there's still lots of people also convinced that we must have Bitcoin, which is the good attitude. And so there's still a lot of, goodwill into making it happen. So that's the situation. And the reason why it doesn't happen, the obvious reason, the simple reason, is that it's too volatile. People prefer stable coins, even in the real economy. I heard in a podcast recently from Tether that the Tether stablecoin is already being used in the real economy, for instance, for cotton business in Turkey. It's being used in places where the money doesn't work, like Zimbabwe. It's just too volatile and can't compete even with the US dollar, even though this is an inflationary currency where people know they will lose their wealth over long term. I mean, 2% inflation for 50 years of work lifetime, it's not a straight multiplication, but 50 times 2 is 100. So you lose, in reality, you use about 70% or more over your lifetime of your savings to the government. And it's an honest situation. And so this volatility by which Bitcoin cannot compete against the US dollar, that's the obvious problem, why it cannot be circular.
Yeah, that's interesting. And I think after processing our conversation from last time, the mental model that I developed was really thinking about two layers of proof of work here. And I think certainly there's a lot of literature out there which talks about the proof of work of the Bitcoin mining system and, energy and kind of this digital gold narrative. However, you really shared with me this illuminating idea of bills of exchange and the proof of work of the productive economy. And I thought maybe if you could expand on that a little bit, please, so we can kind of get some context for what credit means in the monetary system.
Yeah, I need to steelman that actually a little bit, because there's a narrative in Bitcoin, Twitter, or so to say in this scene, which is problematic, which we first must be aware of. Yeah, it is true that the base money of a monetary system, which has these two components, the base money and credit money, a good system, that the quantity of that must be fixed. But somehow, and I don't know why, it never sunk in the Bitcoin community that in Austrian economics, you have two types of money for a functioning monetary system. One is a fixed base, and the other one, so to say, responds flexibly to changes in demand for money, which is credit money. And so once we accept that, which is criticized superficially because everybody knows that the government just prints money and that's a bad thing. But why is a bad thing? We need to really look deeper into the nuance. The problem is that IOU's claims to money are vilified generally, but there are three types of them, which makes it a little bit more complicated than the attention span of Twitter. So these types, the first one is terrible. Yeah, whenever a claim of money is being issued without any backing, it's a bad thing. Yeah, that's a very risky undertaking. It very likely will default. And that's essentially what governments are doing when they create fiat money. They print it out of thin air. Yeah? Then there are claims of money which are secured. Secured claims of money means that you put up a security, I don't know, a car for a car loan, a house for a mortgage, things like that. And if the loan fails, the lender has the right to claim the security from a natural point of view. Yeah, I have to go very back into history here to Thomas of Aquinas, who was a very important philosopher of the Middle Ages. He likened the security of a loan to the use value, the fructus, as he called it, usufructus. Yeah, because you can use your car, you can use your house, and that's why it's just and moral that there be interest paid for such loans. Yeah, these are is the proper definition of usury if there is no such usufructus. And then there's this very important third category of IOUs, which are generated as part of a buy or sell transaction. Yeah, those are really, really important, and very few people know that. So if one merchant, which is his good right, sells his goods to another merchant on credit, he could either say, okay, you pay me in 3 months when you've done your production, when you sold your goods, and then you have the money, and then you pay me. I'm happy with that. Or he could even issue a paper, the buyer, and says, okay, dear seller, in 3 months, I will pay you 10 gold coins or 10 Bitcoins for your goods. And the funny thing is that is secured by the goods, by the real goods, which have already been created, which prove that the seller has done work. Yeah, he farmed, he mined, he produced some intermediary goods, even final goods. And so this proof of work backs this third type of EIU, and therefore it is so essentially important that we actually recognize those three types of IU, and especially since the third type of IU is absolutely crucial for a modern capitalistic economy, which would break down without it.
Well, my take on that was this goes hand in hand with the Industrial Revolution and the lengthening of supply chains, where maybe once upon a time it was maybe a bit simpler in the agrarian world for farming and stuff like that. But once you get into manufactured goods, you have supply chains that involve a lot of people, and your time frame maybe stretches out into the future from when the lumber is going to be turned into a final piece of furniture, or something is delivered. And so there is proof of work there, which is in a sense unrealized. It's a potential energy to turn that raw material into a final good through the process of capitalism. And so this proof of work layer is based on that productive economy, right?
Exactly. Yeah. No, I mean, you explained it perfectly well. I have absolutely nothing to add to that. So when those businesses who are in the productive sector, in the production and supply chain, have created something, they have worked. And the fact that a buyer and the seller met, and the buyer has a need for that good and is willing to pay a price, and the seller has found the best buyer and is willing to accept the price. Those two people, they solve, so to say, the valuation problem of that production. Yeah, so that's a very important point when the buyer and seller meet, and when the goods are not paid with outright coin, but with credit.
Yeah, and this would be where the role of private free banks come in, right? Where they are able to take responsibility for these relationships, understand the nature of your business, see the books, see your history that you've been able to successfully produce already, etc. And that is quite distinct from central banks, which are, it's all within the same kind of system from the outside, I guess, but there is a difference between those two, right?
Yeah, exactly. And again, there is a narrative which we need in the Bitcoin system, which we need to steelman. But before talking about how banks come in, there's one important thing to know. If a buyer pays a seller, let's say a farmer, in coin for a harvest, obviously the farmer can spend the coin immediately. Yeah, he could buy machinery, he could pay his workers, which was what used to be called a work fund. Very important to get to full employment. If you don't have that, employment shrinks and the whole economy essentially collapses because there's no income. So they could pay the suppliers, the workers, with the gold. If they don't have that, yeah, if the seller just gets a credit without a paper, He also can't do that. So that's really, really bad for the economy. So what happened in the first stage is after the gold scarcity crisis in 1465 in Europe, was that people started to write these so-called bills of exchange, this third type of IOU, which says, I will pay you in 3 months. And the funny thing about such papers, yeah, if they are on good merchants, on good farmers who have a good business, or buyers of farming goods, which have a good reputation because they produce, I don't know, ketchup, fruit drinks, whatever. And if that's good paper, the seller can actually pass on that piece of paper, that bill of exchange, to another company. For instance, the farmer could pass it on to a company which produces farming machinery and say, okay, I now need this new tractor. Here I have a bill of I don't know, Kellogg's Cornflakes company, which bought all my corn. It's about for 10 Bitcoin. Please give me a tractor. And the tractor manufacturer says, well, I know you produce fantastic corn. I know Kellogg's. These guys are all in business relationships to each other. That's very important. It's a network of business, of what used to be called the merchant's honor. Honor used to be very important in the past. Anyway, so he knows that the machine manufacturer said, okay, I'll take this paper. Yeah. And then he already paid, because the nature of the bill of exchange was that the goods which you bought with it went into your property. You had full property to use them, sell them, change them. Yeah. Like one of the licenses in software which we have nowadays. So with this full ownership, they passed on. So that was nice, yeah, and it already mobilized that capital for capitalistic production, but it was not ideal because, as I just explained, those bills of exchanges were not fungible. Maybe people didn't know what was going on at the farm. Maybe there will be a bad weather next year. Maybe Kellogg's doesn't sell cornflakes anymore in a year because nobody eats cornflakes. So it was not fungible, and these bills of exchange had to be passed on whole. Yeah, so they couldn't be the money which the bill which the seller received couldn't be used to pay the workers. No work fund. People got to eat. So what happened then was the development of so-called discount houses, not banks. Yeah, discount houses. And discount houses essentially gave out banknotes in return for such bills of exchange. So they essentially bought the bills of exchange, one paper with another paper with banknotes. Now those were fungible, yeah, particularly if the issuer was very well known. Not totally fungible because there were different issuers, thousands of banknotes in the past. But then they were divisible, very important also for money. So all of a sudden the farmer who sold his corn now had, I don't know, 100 banknotes for $10 or $20 bills, which were redeemable in coin. That was also very important.
Interesting. And I think just clarifying with these bills of exchange, they are bearer instruments, right? So they are contracts. Yes. And as soon as they leave your hand and go and someone else has it, they now have that. I guess they're entitled to what is in that contract, right?
Yeah, the development of the bill of exchange is a great, let's say, societal achievement with all the properties, because it was recognized that this was necessary to get to a capitalistic economy. And that's why lots of safeguards were put in place so that these bills of exchange get honored. For instance, if it wasn't honored, the bill of exchange, essentially a businessman was finished in the old days. You know, because they were essentially ostracized out of the business community if they couldn't come up with the money, because anybody who held a big bill of exchange which became due could go to the court and essentially take everything that person owned in payment until the bill of exchange was paid. So this is not, as often is misunderstood in the Bitcoin system, collateralized just by some Bitcoin. No, it's backed by the work which the person has already done, and it's guaranteed by all he owns, which is of course much stronger than just some volatile collateral. It's a very safe system.
Yeah.
And the other safeguard which they built is the which made things even easier. If I'm the holder of a bill of exchange and I don't get paid by the original payer, I can go back to the person who gave it to me in exchange for the sale of my tractor and say, look, the payer hasn't paid up, you pay up now. And that was also instituted in the legal system, that person immediately had to pay. And in fact, in the late 19th century, when this system was at its height, bills of exchange were passed from hand up to 20 times over those 3 months of credit they granted to the buyer. So you can see it was really circulating, and it was, so to say, powering a circular economy in gold coin.
Yeah, well, it's interesting. In a recent episode, my guest mentioned Lex Mercatoria, merchant law, and the history of bills of exchange in New Zealand and various places. And they are actually, I don't know in detail, but it seems as if they're quite a foundational thing that precedes and predates a lot of other aspects of the legal system. And I'm not sure if you know enough to expand on that, but it really stood out to me that we don't talk about them these days, but they are quite fundamental to the legal system.
No, of course. I always forget the name, but I mean, we already do know that early bills of exchange had been in China already during the Tangdian dynasty. So we're talking a couple of hundred years after Christ, 600, 700, 800 after Christ, when they were in existence there already. They were in existence in the Arab countries, even before the bullion crisis in Europe in 1465, as I mentioned. And obviously in Europe, they really got then to bloom from out of Lombardia, of northern Italy. With everybody knows the Medici and the other big banking families. That's how it all started, and how the Industrial Revolution was actually then funded, because without that we wouldn't have had the capital. If all this proof of work couldn't circulate, if it was just lying there, there's no chance to develop an industrialized society. And the first country which actually used this to really good effect was the United Kingdom. After the development of the steam machine, which gave rise to a much more industrial, capitalized, capital-intensive industry, the cloth making, they used it to perfection, so that all capital which was lying around in the nooks and crannies somewhere in the country got mobilized for the economy, and that's how they became such a big industrial power. Until the First World War, and that's a problem in Bitcoin nowadays. Because the big Bitcoiners, they may invest the Bitcoin here and there, or donate it, or build some venture capital, but the small hodlers, they just sit on the money and hodl it, and it doesn't get used productively. It cannot work. That's the reason why the Bitcoin adoption doesn't rise, because we are not building a credit superstructure, which is so important for the stabilization of the value of a currency.
Yeah, I do want to dwell on this a little bit more, because I do think a lot of people maybe listening certainly haven't heard this perspective before, and I hope later on we can get into what you're doing with Bitcredit specifically. But I mean, something you mentioned was there is this sort of Rothbardian approach within the Bitcoin world, and I wonder if you can expand on what you mean by that, please.
We talked about that in Vienna, and I think you read Mises's Theory of Money and Credit since then. So
that's
hopefully,
right. Yes.
you now see what the problem is. So let's go into that problem. I mean, Rothbard, as you know, was more of a lawyer than an economist, and far less detailed on this monetary matter. So I guess he transported the part of Austrian economics which said the base money of a currency system must have pretty much a fixed supply. It shouldn't be able to just create it out of thin air, which is correct. But somehow he and all these other people who just copycatted him, like Seyfedin, and parroted him, then didn't go, is the nuance which Hayek and Mises did. I mean, both were very clear that you cannot have a working monetary system without an elastic currency. Hayek said these exact words. in denationalization of money, which is another important book to read. And somehow this didn't get through to let's say the Bitcoin narratives. The Bitcoin narrative is, we must have only a fixed supply and nothing else, because otherwise the governments print EIUs and blah blah blah. But that's not true. First of all, I said there's 3 types of IOUs, and the other thing is government should be kept completely out of the system, and that's when free banking comes in. Yeah.
And I think so. On that note, this we've got these 2 layers of proof of work: a base layer, money that is fixed, that is the 21 million that we always talk about, but then the productive economy, which is actual capital goods. And certainly my experience with the Bitcoin world, BTC Prague, going to conferences, there's a lot of mining systems, there's a lot of Bitcoin wallets for sale, maybe some t-shirts, and that's about the limit of the goods and services. Maybe some people accepting Bitcoin for payment, but that's pretty few and far between, and it is actually a bit of a slog, even when there's clear incentives and reduced fees in terms of using the Lightning Network. It's a lot cheaper than using credit cards, etc. There's still this reluctance, and ultimately, when it comes to paying your suppliers or your vendors, taking payments, you generally can't use Bitcoin. There's very few things, except maybe some niche cases, where the entire supply chain is built upon Bitcoin. I don't know if there's anything. Maybe some of the hardware wallets are able to do that. But certainly, even if you buy a t-shirt with the Bitcoin logo on it, you're going to be paying fiat to get it printed, and that company is going to be paying fiat to get its raw materials. And so that clearly has stood out to me as a challenge here. And so how can Bitcredit and this protocol that you're working on help roll out to the productive economy?
Yeah, just to confirm, I had the same impression walking through the supposed innovation hall of Bitcoin companies at Bitcoin Prague. The same boring things which not boring, interesting, but I mean, it's kind of the same things which we've seen now for several years. And so it's not only the value of Bitcoin, which has been stagnant or slightly declining even from the peak. It's also the Bitcoin ecosystem which is stagnant. It's the same companies. And that is because of what we just talked before, the normal economy needs capital. And it doesn't help if Bitcoin is being hodled and if it's not being put to work. So that's why other business cannot really adopt Bitcoin unless they're extremely committed to the cause. And there are those. Yeah? So I really admire them. But it's of course not anything which a majority or almost nobody in the economy can afford to do. So until we get this credit money layer which mobilizes the proof of work of the real world economy, of the capitalistic economy with long supply chains, many production stages. I mean, I think in the Bitcoin area, the story of the pencil is well known, I think, right? About how many steps go in that. And that has been like that since millennia. Like even if you look at the Greek islands, how each island specialized in certain things. Here in paint, they're in clay, they're in pottery, they're in glazing, colors, whatever. I mean, division of labor and specialization is key for the wealth of nation, and you cannot get that going in a currency which lacks this elasticity layer, where you cannot put proof of work to work. Yeah, if it's just lying idle.
Yeah. Do you think it's possible, if we assume Satoshi Nakamoto was an American developer of some sort, that there was an influence of this Rothbardian angle and maybe the compression of trusted third parties, which is mentioned in the white paper, the compression of that idea to include everything from the central banks all the way through to private banks and these IOU systems, and perhaps maybe that has led to this point we're at today, where it's an extremely good store of value and the digital gold narrative is there, but it's sort of stopped at that point. So it's not that it's in a bad state, it's just maybe in the first phase. What are your thoughts on that?
I actually can just report, because this is very well documented, and we've linked actually the crucial passages of Satoshi Nakamoto's own words our information website. No, Satoshi Nakamoto definitely knew the European Austrian perspective, as he had a conversation with a guy called Sepp Hassel, not Hasselhoff, but Hasselberger, something like that, in about 1 month after launching Bitcoin. And there they already discussed this necessity of monetary elasticity. I mean, outside Bitcoin, in normal banking, it's very clear. Nobody would even doubt for a second that monetary elasticity is needed. It's really just a weird narrative floating in Bitcoin Twitter. So he knew, and they actually discussed some proposals on how to achieve it. I mean, one proposal by Sepp was just to increase the money supply by the number of nodes which join the network. And then somebody said, "No, you can't do nodes because you can fake that," and so on. There was a really intense discussion around that. So no. He was definitely aware of it, and he did wrote if he knew of an algorithm which could do this supply change, he would program it, but he doesn't know it.
Yeah.
And point is, Austrian economics tells us that there is no such an algorithm. Because the demand of money is highly individual and highly situational. So it's the merchants selling it's the farmer selling his corn right now who is in need of monetary elasticity. It's cannot be a central party who says, "Oh, there's a farmer sitting in that and that village in a mountain in Austria. He now needs money, and that's why we're going to print more." No. That's not how it works. It must be generated peer-to-peer and completely decentralized, like the free market works, because only the involved people have the knowledge of how much money is needed and what the value of the work is which backs that money.
Yeah. Okay. So, I mean, diving into this, so looking at Bitcredit, firstly, I mean, this project, when did Bitcredit start?
Well, as I said, the first presentation of Bitcredit product happened at Bitcoin Austria in 2014, 2015. I was then busy with other things and didn't pursue it. Also because I thought it's so logically, somebody will do it.
Yeah.
It was really a surprise when, so to say, and I dropped out of Bitcoin at the time because I said, okay, let's wait till this works like a monetary system and then we can use it. And then in 2021, I got reminded of it when Silicon Valley Bank collapsed and, bank bailout. And then, of course, it triggers, okay, Genesis block. But so where's the credit money layer?
Yeah.
And I was so amazed that nothing had happened. I mean, there were lots of business who building credit on Bitcoin as collateralized Bitcoin, which is kind of just a bad type of money, according to Thomas of Aquinas, because you don't actually use Bitcoin, because the use of Bitcoin is medium of exchange in a proper world. So anyway, I thought, okay, this is crazy. Let's just build it. And so one of my hobbies is I host the monthly Austrian School of Economics seminar at the Hayek Institute here in Vienna. And so over the next year, we kind of started discussing several principles of that, just to make sure that the credit money theory is correct, or so to say, well accepted, or listen into the criticism which the seminar crowd had, which is a very high powered, highly debating, a very good crowd. Anyway, so it hardened. At some stage, Mikita, the lead developer, so approached me and said, "Okay, why don't we simply do this?" I said, "Yeah, be my guest. Let's start." So that's how it started.
Yeah. And I mean, again, come back to this idea that Bitcredit will provide a fiat-less on-ramp for financing the real-world economy, including capital and the wage funds and all the immediate costs that a business takes on when it's trying to do something in the real world, but through the decentralized issuance of peer-to-peer Bitcoin credit money. How does this work on a technical level? I mean, perhaps just at a high layer, but how does this work? Would you use Bitcredit?
Yeah. So why do we need a fiatless on-ramp? Maybe first of all, when a company shuts down, like Greece did, people can't access the bank account to buy Bitcoin. Yeah, so this whole buy Bitcoin theorem actually doesn't work in the one situation where it's our best chance to get Bitcoin really going. So the solution, of course, is you must be able to earn Bitcoin for your work. And this is where proof of work comes in. So when a bill of exchange is being created, proof of work, proof of value, actually, because somebody bought for a certain price, that's the point of time of credit money creation. And we actually don't need an on-chain transaction for that. Yeah, you can simply put that in a DHT, in a distributed hash table. For those who don't know what that is, it's simply a very distributed database which doesn't need a centralized server. It works all peer-to-peer. And use that bill of exchange to essentially mint it then with one of the mint software in the Bitcoin ecosystem, which would be we chose Cashew for the first implementation because it's the more flexible option for what we need to do. But at some stage, we're probably going to also interface to Fedimint. So you can use that to create eCash tokens, Xiaomi and eCash tokens, which is something which Satoshi Nakamoto used also as a concept to build Bitcoins, but just a different form, more peer-to-peer, more decentralized. So you create those and people can pay immediately. And only when the bill of exchange is due, only when the merchants have done their selling, their production, their supply chaining, only then a transaction is needed on main chain when the bill of exchange is paid, so that we can verifiably prove that bill of exchange has been paid, because otherwise there'll be shenanigans going on in that system.
Okay, interesting. And then there's been more and more interest in eCash, certainly in the last probably year or two. And as you know, they're actually a much simpler mechanism. They can be easily sent and received. They don't require the same level of infrastructure as, say, the Lightning Network, which has its use cases in other parts of this broader ecosystem. But certainly they are bearer instruments, and they're relatively lightweight. And so you're imagining these Bitcredit tokens that operate, they move around as eCash, very simple, lightweight, and then they're traded between people. Is that sort of how you see it working as actual end user currency? Or
again, I have probably a slightly different perspective than what is the current narrative, but think it through. Personally, I think that the Lightning network is going to be very, very important for finality between future mints, including credit mints. We call them wildcats. Yeah, wildcats, maybe I explained that word a little bit, used to be banks in the Wild West in America. And it was actually a derogatory term used by the politicians who wanted to centralize money creation, because sometimes, really extremely rare cases, there were banks, dishonest banks in the Wild West who didn't have full coverage of the banknotes they issued. So they called them wildcats. Anyway, we take this as a term of honor. So the free, decentralized Austrian economics style free banking system will consist of wildcats, which are credit mints. And the nice thing about these eCash tokens, as you said, is they can be used for instant payments. They're infinitely scalable effectively. The transactions are free, so no mining fees to be paid for transactions. It works globally in a heartbeat, really, really fast, just as fast as Lightning, maybe even faster. And they secure privacy as a default on the protocol level, because we're talking about blinded signature technology, which is uncensorable and simply private for the person. But at the same time, the big economic transactions between the bill owners, of course, these companies know each other. So and they need to know each other, because there's need to know. Yeah. So it's really a very intelligent mix between privacy and people who need to know each other. So the only problem with debit mints, as we call them, with the cashews today and the Fedimints, is they don't do elasticity. Yeah, you need to send in through Lightning, in the case of Cashew, Bitcoin to get these eCash tokens. And in a way, it's just another complication on top like that. But it is a very important construction element of a future monetary system, because essentially the debit mints, they administer the cash reserves of such a system, and they can communicate amongst each other with Lightning perfectly well. So what I see in the future is that mints will communicate money and value and finalize value amongst themselves with Lightning. Whereas end users like you and I, we will be using Cashew wallets, or let's say eCash wallets, Fedi, whatever, to transact with merchants and amongst each other. Completely scalable. One of the issues here is also the custodial aspect. Yeah, mints today are custodial. So one of the things which we believe we can do, but it's not yet 100% prototyped, is that with credit money, it's different. Because of the strong guarantees in the system, we can reach a non-custodial, not self-custodial, but a non-custodial method by which you can essentially guarantee the exit for retail users into Bitcoin. Even though the layer above, the merchants which use the bills of exchange, have other things to do. We talked about those already, so I won't repeat them.
Yeah. Okay. Interesting. And yeah, so I mean, this is quite a paradigm shift, I think, and a lot of people maybe, again, have come back to, credit money bad, no matter what, sort of blanket statements that.
Yeah.
And I think, I mean, maybe we are, in a sense, I think there is I'm optimistic that there's a truth-seeking element here where more and more we are seeing people talk about eCash and the realization that there is not that much real-world economic activity happening on Bitcoin. Certainly, the focus has been on a lot of sort of microtransactions, and I can and I do buy things with Lightning, but they're not capital investments. They are consumer goods. And again, if we look at the historical example of the Industrial Revolution and the miracle that it was, the world became incredibly wealthy during that period. It was because there was the utilization of capital and capital goods. And so the point where we start seeing factories and real things being funded, the entire supply chain being funded and worked through with Bitcoin or Bitcredit, I think that could be quite a game changer. And I mean, something someone mentioned to me as well, at the moment, Bitcoin as an ecosystem, as an economy, doesn't have any exports. That's how nations can bootstrap a currency, is they sell something and they demand to be paid in that. And so your trading partner has to get their hands on that currency with their currency, and that's how the world goes round, I guess. Sorry, that might be a little bit of a simple take, but you sort of see where I'm going with that.
Yeah. I mean, that's absolutely correct. And in fact, the important thing is the bill of exchange did start out initially because of international trade. So there would be a Medici banker sitting somewhere in Milano and draw a bill of exchange on the Medici brothers sitting somewhere in London or in Lyon or in Amsterdam. And these things would travel much safer than the gold coins, because with the gold coins you're always exposed to the wrench attack. Yeah? So there could be street robbers all along the way, and if they take your gold coins, well, they're gone. Whereas if they have a bill of exchange which says, pay to my brother Luigi Medici in London so and so many gold coins, well, the street robber is not Luigi Medici.
Yeah.
And so this was a much better way to transport money. And in fact, I get asked these questions all the time. Hubertus, why should I pay with Bitcoin credit if I could pay in Bitcoin? Yeah, and then I don't even need to go into the details of why and economically it's absolutely indispensable. But just think about it: when fees explode, for instance, when we see fees like in the early days of BRC20 or the Runes launch, now they're back to normal as was to be predicted. But when fees go up, you don't do that. It's expensive, it takes long, and even with Lightning Network, we have limited scalability. Yeah, with this thing, we finally reach 100% scalability. So it's really the intelligent combination of blockchain on one side and completely peer-to-peer decentralized eCash, which gives us an interesting mix of capabilities. And I think the possibilities for innovation in the eCash system are just staggering. I mean, if we look a little bit at the cashew community, because it's the basis for which we expand, where we put our expansion, it's staggering what's going on there. Very great things coming up.
Yeah, and I guess one analogy then just that comes to mind is it would be as if all of the gold miners went on strike, and if that would suddenly paralyze the global economy, which clearly, even once upon a time, it wouldn't not have done that. But in the case of Bitcoin mining, the miners' fees go up, it becomes expensive. And so it paralyzes the Bitcoin economy, and you become reliant on Lightning. But even then, maybe those channels are not even worth the closing because the fees are so high. And so you sort of run into a lot of issues there.
Well, it happened last year at adopting Bitcoin in El Salvador. So they have these famous farmers markets, which they're very proud of, and rightly so. And so we went there on the beach, and some people, because that was a time when fees spiked to several hundred sats per VByte, some people bought, I don't know, a burrito for the equivalent of $2-3, and all of a sudden had transaction fees of $10 on the transactions, or worse, many transactions didn't go through in some wallets. So there was that situation where people should have realized we cannot rely on base money for retail end user transactions, and how eCash and Lightning would be much better for that, and really use base money for what it's there, which is secure finality of the service providers in that system, which would be the debit mints and the credit mints.
Yeah, that's incredible. And coming back to what you mentioned at the beginning, so I know Bitcredit Protocol has just secured about $7.5 million in pre-seed financing. So where are you at the moment? Because it is an open source project. In terms of the development roadmap, where things are at, could you maybe elaborate on that, please?
Yeah, I mean, it's such a system, of course, must be built as a free open source project, completely permissionless, so that it, even if it gets shut down somewhere by an authoritarian regime, and there are more and more of those in the world these days, it can continue and pop up wherever it wants to pop up. Whatever, if there's only one free country in the world, the system still has to work. Or can work. Let's put it like that. So the reason why we asked for so much sponsorship of the project was that there are two things to be done. First of all, we need to finish the protocol. We are pretty good in terms of the prototype being available in a few months. What needs to happen then is, just like Bitcoin had Core as a reference client, we also need. This is a little bit more complicated, the bill of exchange business. We need a so-called reference mint, which will develop the procedures, the banking policy, the methods, how to mint an electronic bill of exchange into Bitcoin credit money. And that mint will be operated from some suitable country in the world. We haven't decided yet what it will be. We only know it must be a country where the fiat system doesn't work well right now, where the banking system is dysfunctional to prove itself. And so part of the funds will be to go to that country and build a first credit mint, talk to local businesses about their working capital requirements, what holds them up, and solve the problem that businesses in those countries have. We get a lot of reports how business cannot grow because they can't get working capital, how they even have to shut down because the local currency is so inflationary that they need to renegotiate salaries every couple of months or go bust, essentially, that they can't rely that the materials which they bought, that they get to buy them at the right moment, at the right price, and then sell on at a price which is profitable, because inflation also varies, as you know. It's the Keynesian idea of that it's just a helicopter percentage which you apply to the whole economy is obviously complete nonsense. It's very individual. So anyway, so that's where we're going to set up the first credit mint for Bitcoin. and put all the procedures and documents into the public domain so that anybody anywhere in the world can put up such a mint and help businesses convert their credit money, non-fungible credit money from bill of exchange into fungible credit money as a standardized guaranteed claim to Bitcoin.
Okay. And so you imagine this rollout or this pilot program is focused on sort of a specific geographic location and that physical network of businesses in, say, a village or a country of some sort?
Yeah, I think that's how it has to start. I mean, as you know, even Bitcoin had to find its first practical use case in a very difficult area.
Yeah.
No, not going into any details here. So it will be the same for credit money, Bitcoin credit money. It needs a very desperate zone to take the residual risk, because while we know, I mean, Bitcoin valuation has been stuck now. Yeah, I mean, there's lots of narratives again in the Bitcoin scene on what Bitcoin could be worth. My opinion is very, very clear. I don't like the power law at all. This just shows a process which is very well known for hundreds of years called tâtonnement of the initial value finding of a good, but ultimately there is a fundamental value. I don't buy into the stock to flow ratio things. For me, Bitcoin is simply a bet that the Bitcoin will be the medium of exchange globally at some stage. And we know what the utility and therefore the value of such a medium of exchange is, and that's what the value is. So by starting off in the worst hit countries, or with small and medium businesses which suffer from the so-called trade finance gap, which means the international trade simply doesn't happen because of restrictions in the fiat system. Which means that the countries which are affected, the businesses can't grow, they stay poor, people stay poor, there is very low wages or no work and unemployment. So the Asian Development Bank says this is about $2.5 trillion which cannot be served right now in the world. So that's where we start. And I think if it starts well, it's a good way to get out of the weaponization of fiat currencies, which are always owned by nation states, and of course, big brother surveillance states coming on as soon as the currencies get digital. It's very important that we separate money and state as soon as we can.
Yeah. What you just said reminded me of, you might be familiar with the microcredit movement in the 1970s, Muhammad Yunus and others.
Sure.
I think it was Pakistan and places like that where you were able to do these small, they were able to organize these small microfinance, microcredit operations to help businesses get started, because in a lot of these places, capital is the limiting factor, and you need something to just help bring the kind of the magic together, right, to be able to have the factory, to then start having the jobs, to then start having the income, and that's the virtuous cycle. And so do you see maybe something like that where it's more of a microcredit focus initially, perhaps?
Yeah, we'll see how it turns out.
Okay.
Yeah, we're just being in touch with people in some of those markets where we think would be good places to start, like Argentina or Turkey, and see what exactly the need is and who is hardest hit by that problem. But yeah, microcredits are probably an interesting example, with one exception. Yeah, it's centralized thing, so you need an entity to arrange that. Whereas peer-to-peer credit through bills of exchange, people can start out directly amongst each other, which is a very important decentralization element. And then, of course, there was just one institution, whereas in a future Bitcoin system, anybody so inclined should be able to set up a credit mint and start getting going. It's going to be a free market, and the minting fees will be set by the free market in competition of various mints competing.
Well, look, Hubertus, overall, I think this is an incredibly fascinating area, and I certainly feel as if it's underrepresented and certainly not spoken about that much. And as you outlined, though, I mean, even Hayek and von Mises both clearly outline the importance of an elastic money supply and challenges with volatility, which is certainly a critique that I've heard from others as well. And so, how do we share this perspective with the Bitcoin community? How do we, I guess, extrapolate something? It is relatively complex. I think it is more complex for people to maybe understand than, fixed supply, which is 21 million. It's very easy to kind of understand why. We've got half the piece. We've got fixed base money. But in terms of, I guess, communicating, workshopping this credit piece, I mean, how do you see that playing out?
Yeah, I mean, that's an important question. One of several major things we have to solve here in the project, so within the Bitcoin community, I think we want to talk to people who make a business of it. So the hodlers, the maxi NGU guys, they will remain toxic. But I think those who try to run a business in Bitcoin, who earn Bitcoin, will have financing needs and capital needs. And those are the guys whom we're going to speak to in the Bitcoin environment. And then, of course, we need to speak to those people who are in the fiat environment and who are served badly because of regulations, weaponization, and just the inflexibility of a dysfunctional banking system. So those are the two communities to speak to: businesses within Bitcoin and small and medium neglected businesses in the fiat world.
Interesting. And I think it's also probably worth mentioning, I don't think, from my perspective, I don't think it's a massively divisive area. I think we need still the base money to be protected, and I think that's maybe where the attitude of the kind of digital gold narrative comes from. But more and more, I think people are realizing that there is a next step to that, for this to become, to move on from store of value to medium of exchange, and that there is sort of a paradigm shift, a changing of guard, perhaps, where we start inspecting this a little bit more closely, start understanding the business structure of how capital and running a factory, for example, works, because that's not something that a lot of people have experience with. And in particular, the information economy, I think a lot of people coming to Bitcoin are from developed Western countries. They don't know anything about manufacturing. I mean, I'll be the first to say, I mean, I'm a Kiwi and I know a bit about farming, but certainly building factories and exporting stuff, that's actually quite a different target market. And those people maybe don't know about Bitcoin. So once they start understanding that you can use this for credit and for funding operations, building your next factory, then you start getting the widgets into the economy, which are built through the Bitcoin ecosystem. I mean, that's kind of quite a promising place to be as a kind of a future step.
Well, I couldn't summarize it better, Cody. Maybe so to say, outlining just where the project needs help. I mean,
please.
We could help in type of communicating to expand the current narrative for what's needed for the real economy to work, and put more focus on that. Maybe people who want to use Bitcoin in their businesses, people who understand credit. So we're talking the bankers, which the toxic part of Bitcoin doesn't like, even though in the very beginning, in 2008, 2009, the debate was very clear that there will be banks needed in the Bitcoin system. There's also lots of groundwork to be done to communicate to businesses this possibility without getting lost in the complexities of Bitcoin. Because for the business, they need a screen to fill in 5 fields. Have the bill of exchange, go all over the place, and if they want to mint it into Bitcoin credits, then they have to do it with one click. So there's a lot of work on usability to be done. So there's tech work, but I think the Bitcoin ecosystem is very good on tech. I mean, the technologies which are coming out are just staggering. It's fantastic. The weakness is really with economists and some strange narratives which pervade in the system. Not to least the Sellerites, as we call them, who push this impossibility of infinite value in something. Yeah, I mean.
Michael, the Saylorites, you mean? Michael Saylor?
Yeah.
Yeah. Sorry.
Yeah. Yeah, those who essentially treat Bitcoin as a meme coin instead of our future money.
Yeah, that's fascinating. And if people want to follow and learn about Bitcredit, where can they go, Hubertus?
Yeah, the easiest is probably, we have the project has an information website, which is very easy to remember, just 5 letters, bit.cr. And in the bottom of that page, there's the links to our GitHub, to the Telegram group for those who want to be more actively imposed, or maybe just follow on Bitcredit.org on Twitter, X. You'll find the link at the bottom of this page. So bit.cr, 5 letters.
Okay, awesome. Yeah, this is incredible, and thank you for sharing what you're doing with this. And I believe that even Hal Finney mentioned the role of Bitcoin banks sort of
That's
early
correct.
on.
It was Hal who did at the time. Yeah, exactly.
Yeah. Cool. Is there anything else you wanted to add or share while I've got you?
No, that's really nice, and I think New Zealand at some stage, once we have a certain Bitcoin credit superstructure, to stabilize the value, the project can then move on to the more developed countries with better banking and monetary systems. And given the importance of bills of exchange in the agricultural sector, New Zealand may in the past, New Zealand may well be a very good country also to do something. So if you have a business community, very happy if you talk to them at your local meetups and see how they feel about the banking system and whether there's space for Bitcoin to be adopted in the business community.
Yeah, absolutely. No, I'm very interested in that, and I think what I see here is an opportunity for a broader conversation, because you're running these workshops at the Hayek Institute and these kinds of things, but I do keep coming back to this idea that there is no exports from Bitcoin at the moment, and I think this could be part of enabling that, could be part of the growth of the ecosystem. And certainly, I hate to say it, but if the world is heading towards conflict, which seems like there is more and more of that taking place, it may be unfortunate that it requires a bit of a burning of the old guard for these new systems to emerge when global credit systems, global fiat systems start to fail. And you mentioned Greece, 2015. We more than ever, we probably need systems in place so that we can rebuild the factories and the infrastructure of modernity. If in the case, hopefully it doesn't happen, in the case that there is disaster, because without that, how do you organize capital? It's really as simple as that, I think.
Yeah, no, exactly. And I think in terms of nation states, obviously the philosophy is that we liberalize the money issuance industry and denationalize it, just like the same thing happened successfully in the telecom sector. In the 1970s, you couldn't have imagined that there would be free private telecom companies with a huge amount of innovation today. It was a State Department, and nothing happened. It was hugely expensive and inefficient. And the same thing could happen in Bitcoin if we separate money and state. And I think it's the small, stricken countries which will recognize that it's to everybody's advantage if there's an absolutely neutral, non-censorable, permissionless money rather than the various fiat monies which currently compete for world hegemony. So the hegemons will be the last, so to say, to give in, but ultimately it will be clear that only a neutral money is the best for the world and for everybody.
Yeah, cool. Hey, Hubertus, I really appreciate your time, and thanks for sharing your work with Bitcredit, and I hope we can catch up again soon.
Thanks for your time, Cody, and thanks for the interest, and also for rereading Mises's Money and Credit, which I can really only recommend to anybody.
Yeah, no, cool. All right, thank you very much.
All right, bye.
Bye. Thank you for listening. I do hope you enjoyed the show. I am Cody Allingham, and that was the transformation of value. If you would like to get in touch, please send me an email at hello@thetransformationofvalue.com, and I will get back to you.